Good evening, everyone. I am Poonam Tyagi, moderator of this VCM. We are delighted to welcome you in the 13th VCM of Friday series of VCMs being organized by CECLEA Committee of ICI. It is my pleasure to be a moderator of this VCM on how to recover delayed payments under MSME Act and how to do consultancy in FTP Matters. I would like to appraise you all that this VCM is being webcasted throughout India and 576 number of CAs are watching currently. The program of this evening is as follows. We have two sessions in 1 hour each and faculties are Advocate Brijesh Kumar Gupta and Shri Shashi Kumar Chaturvedi ji. Our eminent speakers will talk about emerging areas of professional interest. Today's first session faculty is Advocate Brijesh Kumar Gupta. So I would like to invite and introduce him. Mr. Brijesh Kumar Gupta is an advocate on record in the Supreme Court of India. In the last 16 years of his advocacy, he has vast experience to handle civil, criminal, commercial, intellectual property rights, corporate law, service law, labor law, and constitutional law matters before different courts, tribunals, high courts, and also at the Supreme Court of India. Now, I would like Mr. Brijesh Kumar Gupta to take the session. Sir.
Yes, ma'am. Thank you so much, ma'am, for introducing me so well. And ma'am, are we expecting more people to join, or is it because right now we have 5 people only?
People will, accordingly, the session will start. It's now the number of participants has 613.
No problem. No problem.
So the members are joining right now.
No problem. So any other portal also, because on Zoom there are 5, you are saying that more than 500 people have joined?
From different registration IDs. So they are watching from different platforms.
No problem. No problem. So hi everyone. So let's start the session. So let me share my screen with you. So let's start with this MSME Act 2006. So I would be focusing only on how to recover delayed payments under the MSME Act. So I will start from the point of what are the reasons for introducing MSME Act 2006. There was, before 2006 Act, MSME Act, there was 2 acts. One was Industries Development and Regulation Act 1951, and the other act was Interest on Delayed Payments to Small Scale and Ancillary Industrial Undertakings Act 1993. So the point is that both these acts were not recognizing the most vibrant sector in the economy, that is the MSME sector. So for that purposes, the idea of introducing MSME Act was to bring an appropriate legal framework for MSME being dynamic and vibrant sector. And the other reason was that Interest on Delayed Payment Act was inadequate and ineffective for recovery of delayed payments by the small scale industries. Because, in the earlier act, the credit period was 120 days, which is now 45 days in the current act. And the definition of SSI, small scale industries, was not clear, and the legal remedies were also inadequate. The small scale industries definition under section 3J of the Industrial Development and Regulation Act was exclusively for manufacturing purposes, but not for the service industries. Currently, the MSME Act includes both the manufacturing industries as well as the service industries. And in the earlier, before introducing this MSME Act, the difficulty was that conventional methods of recovery of delayed payments like regular suit for recovery, summary suit for recovery, and other remedies were proved to be inadequate and non-effective for MSMEs. So what are the key features of the MSME Act? So on the face of it, because very few books have been written and very few cases have gone to the court, let me be very, very honest with you all that the provisions under the MSME Act are the very stringent provisions. These provisions have been made for the protection of micro and small enterprises. I am just repeating, micro and small enterprises. Medium enterprises, the scheme for recovery of delayed payment is not for the medium enterprises. It is only for micro and small enterprises. The other key feature is period of payment to MSMEs have been reduced to 45 days. Rate of interest on outstanding amount have been increased to 3 times of the prevailing bank rate of the RBI, compounded on monthly basis. And in like a normal civil recovery matters, the jurisdiction under the MSME Act has been specially conferred upon the MSC Facilitation Council rather than upon the regular courts, because in the regular courts, when the matters are being filed, they takes long period of time as well as the high cost, and there is also uncertainty of results in the courts. So the timeline of 90 days have been prescribed for resolution of disputes by the MSC Facilitation Council. And declaration of now in the MSME Act, the key feature is that buyer has to declare in their annual accounts, the annual statement of account, that these are the outstanding payment of these creditors. So what are the now the interest paid or payable to the supplier are disallowed. This means under section 37(1) of the Income Tax Act, the expenditure for business or profession was booked as an expenses, but this is an exception to that section 37(1) of the Income Tax Act. It says that interest paid or payable to the supplier for delayed payments are disallowed for deduction for the purposes of computation of income under the Income Tax Act 1961. And no court shall entertain, this is a very, very critical provision under section 19. It says no court shall entertain any appeal, order against order of Facilitation Council or its delegate without deposit of 75% of the awarded amount payable by the buyer. So for the purpose of recovery, when a claim is filed before the competent authority, if the buyer is held liable for deposit of the amount, then he has to firstly deposit 75% of the awarded amount payable to the supplier before the court, and court will only entertain the appeal only when the amount is deposited. So next is that appellate court may order payment of a part of pre-deposit amount by the buyer at the time of entertaining of the appeal to the supplier. So once the amount is deposited, 75% amount is deposited at the time of entertaining of the appeal. In that case, the appellate court can order the part payment of the pre-deposit to the supplier. And the other point is that MSME Act has the overriding effect over the inconsistent laws for the time being in force. Those provisions of law which comes in the way of the effective enforcement of the MSME Act, on those provisions the MSME Act has the overriding effect. So scheme for closure of business. So under the MSME Act, there is a provision under section 25 of the MSME Act that the central government may bring the scheme for the closure of the business of the MSME Act. it is like a winding up petition under the Companies Act. Earlier it was a winding up petition. So the section 27 of the MSME Act also prescribes the penalty for non-filing of the memorandum, non-disclosure of unpaid amount with interest in annual statement of accounts by the buyer, and non-compliance of the order of officers of the central or state government. Next is, what are the relevant definitions under the MSME Act? So the relevant definition is, firstly, the buyer. Buyer means whoever buys any goods or receives any services from supplier for consideration. So here the definition of buyer and supplier both are very, very relevant for the purposes of section 15 of the MSME Act. So buyer means whoever buys any goods or receives any services from a supplier for consideration. It means buyer can be any person, either it is an individual or a proprietorship firm or any other person who buys goods or services from the supplier for consideration. It is not necessary that buyer should be registered under the MSME Act. The next is supplier. Supplier means a micro or small enterprises. Here the medium word is missing. So only under the MSME Act, micro or small enterprise which has filed a memorandum with the authority under section 8(1) of the MSME Act, they are the suppliers. So for the purpose of invoking the MSME Act for recovery of delayed payments, the supplier must be registered as micro or small enterprises. And that includes the National Small Industries Corporation being a company registered under the Companies Act, the Small Industries Development Corporation of a state or a union territory by whatever name called, being a company registered under the Companies Act 1956. Any company, cooperative society, trust, or a body by whatever name called, registered or constituted under any law for the time being in force and engaged in selling goods produced by or small enterprises, by micro or small enterprise, and rendering services which are provided by such enterprises. So here is the definition of appointed day. This is very, very important to understand what is appointed day. Appointed day means the day following immediately after the expiry of the period of 15 days from the date of acceptance, or the day of deemed acceptance of any goods or any services from the supplier. So appointed day is the immediately following day following immediately after the expiry of 15 days from the date of acceptance. What is date of acceptance is? It means the day of actual delivery of the goods or rendering of services, or where any objection is made by the buyer regarding acceptance of goods or services within 15 days from the date of delivery of goods or rendering of services, the day on which such objection is removed by the supplier. The day of deemed acceptance means where no objection is made in writing by the buyer regarding acceptance of goods or services within 15 days from the day of the delivery of goods or the rendering of services. The day of actual delivery of goods or rendering of services. So here goods have been defined. So here the goods have been defined exhaustively. So goods means every kind of movable property other than actionable claims and money. So here the actionable claims and money are very, very important, because in the case of finance company, because they are in the business of providing financial assistance to their customers, so money is not covered. So for the purpose of invoking MSME Act, a financer cannot apply the MSME Act because it does not fall within the definition of goods. Micro enterprise, small enterprise, and medium enterprise, all three are something which are defined under section 7 of the MSME Act. I will take you to forward when I will discuss these definitions when that slide comes. So enterprise means, here the enterprise word is very, very important. Here the word industrial or service or anything else has not been used deliberately, because under the earlier act of 1951, Industrial Development and Regulation Act, the expression industrial undertaking was used. So for the purpose of now covering the service industry, so it may not be an industrial undertaking, it may be a service provider company. So that's why, in order to include both in the one act, the enterprise expression has been used by the legislature. So here these are the definitions cum classification of the enterprises. Micro enterprise are those enterprises which are engaged in manufacture or production of goods specified in the first schedule to the Industrial Development and Regulation Act. So here I will pause myself. So here the micro enterprise must engage in manufacturing or production of goods specified in the first schedule. It means Industrial Development and Regulation Act has a first schedule. It has prescribed certain items like metallurgical industries, non-ferrous fuels, boilers, prime movers, electrical equipment, etc., etc. So which items does not fall in the ambit of the first schedule, those industries are not the micro enterprise within the definition of section 7 of the MSME Act. So for the purpose of manufacturing, the investment in plant and machinery does not exceed 25 lakhs rupees, or engaged in providing or rendering services where investment in equipment does not exceed 10 lakh rupees. So here the expression plant and machinery for manufacturing unit and equipment is for the service industry. Both are very, very important. Small enterprise means those enterprises which are engaged in manufacture or production of goods specified in the first schedule to the Industries Development and Regulation Act 1951, where investment in plant and machinery is more than 25 lakhs but does not exceed 5 crore rupees, or engaged in providing or rendering services where investment in equipment is more than 10 lakh rupees but does not exceed 2 crore rupees. So for the purpose of manufacturing, the plant and machinery investment must be between 25 lakhs to 5 crore rupees. And in the case of services, the investment in the equipment must be between 10 lakhs to 2 crore rupees. Medium enterprises are those enterprises which are engaged in the manufacturing or production of goods specified in the first schedule to the Industries Development and Regulation Act 1951. So here the investment in plant and machinery should be between 5 crore to 10 crore rupees. And in case of service industry, the investment in equipment must be between 2 crore to 5 crore rupees. So now the question is, who are entitled to get the benefit of recovery of delayed payments under the MSME Act? One, micro enterprises. The second is small enterprises. So medium enterprises are not covered under the MSME Act for the purpose of recovering of delayed payments. So I'll take you to, these are the relevant provisions. What are the relevant provisions for recovery of delayed payments under the MSME Act? First is section 15, liability of the buyer to make payment. Here in this case, it is very, very important to read the headline of this section, which says liability of the buyer to make payment. It means the buyer has the liability. Here it is not written that right of supplier to recover. Here it is the liability of buyer to make payment. where any supplier supplies any goods or renders any services to the the buyer shall, it is the bounden duty of the buyer, it is the bounden duty of the buyer to make payments. Buyer shall make payment, therefore, on or before the date agreed upon between him and supplier in writing, or where there is no agreement in his behalf before the appointed day. It means for the purpose of invoking section 15, there must be a supplier, there must be a buyer, and thirdly, there must be the goods, delivery of goods or services. Fourth is that terms and condition either must be in writing or where there is no agreement in this behalf. In that case, the payment should be made before the appointed day. Appointed day is the 16th day of the acceptance of the goods or the deemed acceptance. Provided that in no case the period agreed upon between the supplier and the buyer in writing shall exceed 45 days from the date of acceptance or the day of deemed acceptance. Here I want to clarify one thing, that there is a rider to this section which says that in no case period agreed upon between the supplier and the buyer shall exceed 45 days. It means when the credit period between the buyer and the supplier has been agreed as like 60 days, even then in those cases the supplier and the buyer cannot invoke or enforce such credit period of 60 days because it is against the spirit of section 15, and section 23 says that any provision inconsistent with the MSME Act shall have the overriding effect. So the maximum limit for the credit is 45 days and it must be in writing. If it is not in writing, in that case, the appointed day is the final day of payment to be made by the buyer to the supplier. Section 16 talks about the date from which the interest is payable and the rate at which the interest is payable. Where any buyer fails to make payment of the amount to the supplier as required under section 15, the buyer shall, notwithstanding anything contained in any agreement between the buyer and the supplier or in any law for the time being in force, be liable to pay compound interest with monthly rest to supplier on that amount from the appointed day, or as the case may be, from the date immediately following the date agreed upon, at 3 times of the bank rate notified by the Reserve Bank. It means, number 1, if the buyer fails to make the payment in terms of section 15, the buyer shall, notwithstanding anything contained in any agreement between the buyer and the supplier or any other law for the time being in force, be liable to pay compound interest with monthly rest. It means all the principal plus all the unpaid interest shall be the part of calculation for the next month interest. And that rate of interest must be 3 times of the bank rate notified by the Reserve Bank. Next is recovery of amount due. For any goods supplied or services rendered by the supplier, the buyer shall be liable to pay the amount with interest thereon as provided under section 16. So section 16 says that the person who has not made the payment by the appointed day, he shall pay the interest at the rate of 3 times of the bank rate notified by the Reserve Bank. And in any case, the credit period cannot exceed 45 days. Reference to Micro and Small Enterprise Facilitation Council. So now the point is that when, firstly, under section 15, it was the liability of the buyer to make payment. Section 16 talks about what is the rate of interest and when the interest will be calculated from the date from which the interest to be calculated. 17 is the recovery of amount due. Despite all these three sections, if the buyer does not make payment despite reminders and despite repeated requests, in that circumstances, the seller has to make a reference to the Micro and Small Enterprise Facilitation Council. So in this, the council has three responsibility. Number one is to conciliate the matter either directly or through any of the agency or institute for and on their behalf. Secondly, the other part is that in case the reference is failed, in that circumstances, the alternate dispute redressal system will be adopted, and thereby the council shall make a reference to the arbitrator under the Arbitration Conciliation Act for the purpose of conciliation of the dispute under the MSME Act. Now, next point is that here it is very, very important. Every reference made under this section shall be decided within a period of 90 days from the date of making of such an application. So the timeline has been provided under the MSME Act because MSME Act prescribes a 90 days period for the disposal of the application for the recovery of the amount due under the MSME Act. Now the point is Section 19. Section 19 talks about how an application for setting aside of an award or a decree shall be filed before the court of competent jurisdiction. So this section starts from the expression no application. So no application means this is a negative definition which assumes that without the filing of pre-deposit fees, the application for setting aside of award shall not be entertained. No application for setting aside any decree, award or other order may be made either by the council itself or by any institution or center providing alternative dispute redressal services to which a reference is made by the council shall be entertained by the court unless, here it is very, very critical and important, unless the appellant not being a supplier. Here the expression not being the supplier has been used because sometimes the claim of the supplier is rejected. So, claim of the buyer is of supplier is rejected. In that case, supplier may also come to the court for challenging the award. That's why the amount, the pre-deposit is to be done only on behalf of the buyer, not on the seller. The amount is 75% of the amount of decree, award, or as the case may be, the order in the manner prescribed by the court. Now the question is, what is the mode of making payment? The mode of making payment is to transfer the money in the treasury's bank account. The bank, the court or the bank does not accept the bank draft, DD, LC, etc., or any other mode of payment other than bank transfer or cash to be deposited in the bank account of the concerned department. So that is very, very important because the proviso under section 19 of the MSME Act says, provided that pending disposal of the application to set aside the decree, award or order, the court shall order that such percentage of the amount deposited shall be paid to the supplier as it considers reasonable under circumstances of the case, subject to such conditions as it deems necessary to impose. This section is very, very important. This proviso says that the court has a power to give the money from the deposit of 75% made by the buyer to the supplier. So now, after explaining what are the reasons for MSME Act, after explaining what are the key features of the Act, then there are the relevant definitions. Now we are coming to the definitions. I cover section 7 of the MSME Act. Now, what is the procedure for recovery of delayed payments under the MSME Act 2016? Ministry of Micro, Small and Medium Enterprises has established MSME Samadhan, Delayed Payment Monitoring System for recovery of delayed payments under the MSME Act. Now I will show you that how that Samadhan portal is used. This is the samadhan.msme.gov.in portal. You can visit here for the purpose of filing your claim. This is the portal. The other thing is that I am showing a video on the point of how to file a delayed payment recovery case on the MSME Samadhan portal. Just watch this video.
Hello guys, I hope you are doing good. So as you all are aware, recently I uploaded several videos on MSME, like what MSME is, how you can get your MSME registered through the new process, that is VCM registration, then what are the benefits or schemes that are available for MSME, what are the different entities that you can use to operate the MSME and the tax structure. In this video, we are going to discuss about MSME Samadhan. So when a buyer Udyog Aadhar number, name of the petitioner unit. So here, if suppose it's a proprietorship firm, then your name would come here, over here. And if in case your proprietorship firm is there, but it is being run by some different name, then that name would be mentioned over here. Next is address, application refer to the council, the name of the council, PAN number, GSTN number, state, district, social category, means general or what, mobile number, email ID, and type of petition, whether you are micro or small. You have to fill all the details. This is the first page. When you scroll down, you would get put the detail of the buyer, that is respondent, who is going to respond on your complaint. Category, so what type of category of the respondent is, what type of respondent is it a private limited company, is it proprietorship? And if you're not aware what type of company that they have formed, you can just always select the others option. Name of the respondent, address, do you have the PAN number, GST number of the buyer? If you have it, you select yes or no, and alternately provide the same. Next is state, district, mobile number, email ID of the respondent, and the amount payable, which is outstanding amount. And you have to give the consent, click on yes and yes. So this all detail will be of buyer. Once you go forward, then you have to upload the work order and invoices. You can upload the work order, then its date and the invoice number and its invoice date. You have to just fill the data over here. After that, once you fill the data, you would have to click on upload, and you would have to select that particular copy. You can use a PDF file and you can put it over here. Currently, you can file 5 work orders at a one go, right? 1, 2, 3, 4. You have 5 options, but they already given a suggestion that you can upload 5 work orders. But if you have more than 5 work orders, then merge them in a single PDF and upload. So you can upload it more than on the choose file, select from your computer and upload it. Once you upload both the files, you will be able to have an option of view or download. So you can click on view and download to just double check whether you have correctly selected the file. Once you click on submit, it would be prompt you to give an error or notification that are you sure you have completed all the data for application. After final submit, you will not be able to change the data. Guys, we have only done the submit. It is not final submit. So once you do submit, you would get this notification. Once you press OK, it would ask you to verify data once again. So all the data that you have it was filled by you would be pre-filled in this category, and it would show you as a form. It would not be editable. So here it comes like Udyog number, name, state, address of the petitioner, is all the details of yours and the respondent details. Okay. So once you are okay that everything is fine, everything looks good. Here you can also check the workout number, invoice date, and everything. If you feel that everything is fine, everything is good, you can fill out the verification code and do a final submit. In case if you feel there is some error in the data, you can cancel it and redo the whole process. Once you are sure everything is done, you can click on final submit, and that's it. Your case would be registered. They would allot a case number to you, and there would be again a case number mentioned over here, and all your details would be mentioned in this page. So here the application number which is allotted to you would be a temporary one. As I mentioned in the first half, of the video, that application number would be mentioned, that would be temporary. And once it is taken up, it would change to approved case number. So this is how you file a case. And just to give you a small update that once you do this, you would get an email on your registered email ID, like dear so-and-so person, like whatever it is, your application is submitted. Here it would be the application number, facilitation council, reference number. This would be the temporary one, petitioner name, unit name, respondent, PAN or GST number. And also this email would be having attachments of the whole copy, like all the work orders that you have uploaded. At the same time, the whole copy of that performer, the form which you had filled in the first part when you were submitting that case. So once that's done, you can also come back to the basic screen. Once you re-log in it, you will get the details over here also. When you click, once you log in, you get the 2 case ID, right? Earlier we have been having 1. Once we file the new one, you got the 2 ID. Temporary case number, application status. So what the current status is, pending or under review or so and so forth. Approved case number, once this temporary is being approved, it will come under approved case number, the date of the application, amount that is payable or outstanding, hearing date, and the case status, whether it is pending or what. And the application view, of course, you can view the whole application at any moment of time. So that was the whole process of MSME Samadhan. I hope you have enjoyed this video. I hope it is helpful to you. If you like this type of content, please give a.
So this was the entire process, how a case can be filed for delayed payment recovery on the MSME Samadhan portal. Now, so this is my introduction. So my name is Brijesh Gupta. I am an advocate on record in Supreme Court, and I am a graduate from Commerce stream from University of Delhi. I have been practicing as an advocate for 16 plus years at all levels of the courts, tribunals, High Court to the Supreme Court. I have handled civil, criminal, commercial, intellectual property rights, corporate law, service law, labor law, and constitutional law matters before the different courts, tribunals, High Courts, and also at the Supreme Court of India. I am also an author of a unique book, Last Chance to the First Court on Special Leave Petition, most invoking jurisdiction of the Supreme Court under Article 136 of the Constitution of India. So this is the book. So I have written this book, Last Chance to the First Court is a unique book for law students, practicing advocates, corporate professionals, and aspirants of advocate on record examination at the Supreme Court. This book contains everything about the special leave petition under Article 136 of the Constitution of India, starting from the introduction and historical background of the Supreme Court to the court fees. Readers of this book shall get the complete conceptual and practical knowledge about the special leave petition. In this book, after reading this book, readers would have complete understanding about the practice and procedure of the special leave petitions in the Supreme Court. So, I have written this book. This is a pre-launch offer. If anyone wants to buy this book, then they can connect with Mr. Adukia ji, Rajkumar Adukia ji, and the pre-launch offer is 495 rupees. So now this is a Q&A. So if anybody has a Q&A, they can ask any questions from me. Hello? 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 Yes, if anybody has a question, they can ask questions on this topic. Huh? You want to buy a book? I am not getting.
सर सारे क्वेश्चंस आपको चैट बॉक्स में डाल दिए हैं.
डाल दिए
चैट पे देखिए.
एक मिनट में जरा चैट बॉक्स.
सर आपके में मोर ऑप्शन होगा, उसमें चैट्स होगी. चैट्स में जाएंगे तो चैट बॉक्स में आपको क्वेश्चंस मिल जाएंगे.
मेरे पास क्वेश्चन फर्स्ट नहीं आ रहा है, क्वेश्चन 2 से आ रहा है. तो पहला क्वेश्चन है कि सर. यस यस. हेलो
आकाश जी, क्वेश्चन सेकंड से ही स्टार्ट है या क्वेश्चन फर्स्ट भी है?
फर्स्ट आप बोलेंगे क्या क्वेश्चन है? Can you repeat the question? Tender. Yes, trader of goods is now covered for last 6 months. They are covered. Hello? आकाश जी.
सर मैं रिपीट कर देता हूँ क्वेश्चन. मैं बोल देता हूँ. A trader of any goods can be covered under MSME.
They are covered under the MSME Act. You can go on the portal. You will find that traders are also covered now. Hello?
Yes, sir.
Traders are covered. Traders are covered.
Okay, sir.
Sir, with effect from 1/7/2020, definition of MSME is changed, and it is same for manufacturing, service and service sector. Plant machinery turnover micro up to 1 crore, up to 5 crore, up to 10 crore, medium 50 crore. So I have shared my screen with you. Let me just again share my screen. This is my screen on which I discussed about the second question. So if it is a micro enterprise, then the micro enterprise, and if it is in the area of manufacturing of goods, then the investment in plant and machinery does not exceed 25 lakhs rupees. Or if it is a service industry, then equipment investment must not exceed 10 lakh rupees. And in case of small enterprise, the investment should be between 25 lakhs to 5 crore rupees in plant and machinery in case of manufacturing of goods, and in case of services, the investment in the equipment must be between 10 lakhs to 2 crore rupees. In case of small enterprise, in case of medium enterprise, for manufacturing of goods, the investment must be between 5 crore to 10 crore. And in case of rendering services, the investment in equipment must be between 2 crore to 5 crore rupees. Have you got the answer? Akash ji? Have you got the answer? So this is, you can read section 7 it is very clear. Now the next question is, if there is no agreement oblique service order, then what document can we furnish and how will the application be accepted? So if you do not have the work order or service order, then you prepare a sales order. Hello. Sir, namaskar. सर नमस्कार.
नमस्कार नमस्कार. कैसे हैं ब्रिजेश जी?
मैं बहुत बढ़िया हूँ, आप कैसे हैं?
मैं बहुत ही एक्सेलेंट हूँ, एंड we are so lucky that you have found time to address all of us.
So nice of you. I could not say, once you have invited me, then do you think that I have a choice to say no?
No, you do not have a choice to say no.
Yes. So did you get the answer? If you do not have a sales order or any agreement, in that case, you must generate a sales order and file with your case. आकाश जी, ये मेरे को ऊपर दिखाएंगे, क्वेश्चंस ऊपर जाते जा रहे हैं. तो अगला क्वेश्चन है 5 नंबर क्वेश्चन. What do I do in case of no agreement or service order? I have answered this. 4 and 5th question is the same. Whether MSME Samadhan available to traders also? Yes. Question 1 or question 6 is the same. Question 7, supplier includes person engaged in selling goods. My brother, supplier has been defined under section 2 subsection N. So supplier is the person who is registered under the MSME Act. Either that supplier must be a micro or a small industry. Only then he can take the benefit of the scheme for recovery of delayed payments. Did I answer, Akash ji? Can a medium enterprise benefit from any such kind of scheme? Answer is no. This scheme is only available for micro and small enterprises. Next question is, if seller given credit period of 90 days then delayed payment will start from which period? 45, after 45 days. Section 15 proviso is very clear that even if you have given a credit more than 45 days, the buyer is liable to pay the payment by 45 days. If he does not pay, then he has to pay the interest thereupon after 45 days. Is there any time limit to file the complaint with MSME? Can we file Samadhan invoice of 2019? Yes, you can file. The Supreme Court has decided in one case that Limitation Act does not apply to the quasi-judicial bodies. Even if you go on the Samadhan portal FAQ section, you will find that Samadhan portal itself says that Limitation Act does not apply. So you can file the claim of 2019 invoices even today, as no Limitation Act applies. And secondly, Limitation Act applies to the court only, not to the quasi-judicial proceedings. If PO states payment terms 30 days from the receipt of invoice, if the payment is delayed, the interest will start from 46th day, 31st day. The interest will start from the 31st day. Next question is, for classifying micro, small, medium, which date considered to arrive at the investment valuation, and what is the rule, valuation rules? So there are two things. One thing is that the cutoff date is when you are going to file a memorandum under Section 8 of the MSME Act. That is the relevant date. The valuation process is that you reflect in your balance sheet about the investment in plant and machinery, or in investment in equipments in the service industries. Rest rules are to be followed as are followed by the chartered accountants for the valuation. In case of transaction, appointed day is 1st January and payment is made on 3rd January. Interest will be applicable for 1 day, 2 day, 1 day, because appointed day is the following day. Means appointed day is the 16th day. If the payment is not received by the 16th day, then if we calculate from the 1st January, then we will get the interest of only 1 day. That is the 2nd of January, because the payment has already been received on 3rd of January. Next is, how many days does MSME take to accept or reject the complaint? Look, to my understanding, MSME, the moment you register on MSME and you lodge your complaint on the Samadhan portal, automatically a system generated message is gone to your buyer. Most probably in 50% to 70% cases, you get the payment within 15 days itself. And the total period provided by the MSME Act is 90 days. That the council has to decide the matter within 90 days. Timeline is 90 days. Any more questions? Akashji, any more questions? Okay, so I think this part is complete.
And now, Brijesh, we have 4 minutes because
yes,
we have another session.
Yes, I will take, sir, 2 minutes only.
Yeah.
So my session is complete here. So anyone has more questions, they can ask. I think
you also show the wonderful book which you have written, which is your in slide, previous slide.
Yes.
The last chance to the first court.
Yes.
So can you tell something about SLP?
Sir, this is the book I have written on special leave petition. Special leave petition is the last remedy available to any of the person in the Supreme Court after losing in the High Court or at a district court level. This book contains chapters from the historical background of the Supreme Court till the curative petition. Curative petition is the last remedy available to any person in the Supreme Court even after dismissing of the special leave petition. So this covers everything. Any layman or any person who has a little knowledge of law, if read this book, can gather what exactly happens in the Supreme Court in a specially petitions matter. Sir, this is and today I want to share, today is the historical day of my life. Sir, today what happened, my session with you was at 4 p.m. Yesterday, yes. Institute of Chartered Accountants called me from Delhi that we want to request you to lead one session in Haridwar.
Okay.
Of 100 chartered accountants. So I was not prepared with this, slides. So I prepared the slides last night only. So I am here. You just see, I am in the hotel's room.
Okay. So great.
I have led the session from 10 a.m. to 2 p.m.
Superb.
So after that, I am leading this session.
So whatever mind decides, mind can do. And there are 1,500 participants, and I make one statement that everything happens twice, first in the mind and then in the reality.
Yes.
So Advocate Brijesh Gupta ji is a living example. I also follow the same principle, the law of attraction, and what, secret and affirmations. So thank you so much, Brijesh ji. Thank you for your time and what you covered, a very small legislation of 32 sections, MSME Act, and out of that, the chapter 5, which is 11 sections, section 15 to 25. So I request each viewer to give attention to this legislation, to give an attention to mediation, arbitration, recovery mechanism. Thank you, Brijesh ji. Now we'll start our another session. Yeah, thank you. So I'll request Sasi ji to join us. He's already there. He can.
नमस्कार उड़िया जी.
नमस्ते चतुर्वेदी साहब. आपको भी हमने काफी सुना है, and we are very lucky that you are here to address all of us on a very, very essential topic which chartered accountants should lay their emphasis on, because to sell outside India is much easier than to sell in India or in our own city. So we are so lucky that Sasi Chaturvedi ji has 52 years experience. We can see that 17 years in the corporate and 35 years in consultancy. And today he will be deliberating on very, very interesting subject on foreign trade policy. Thank you, SM Chaturvedi Saab. He is MCOM LLB. And the session is yours. Over to you, Sasi Saab.
Okay, we start. Thank you, Oblique, and very good afternoon, my friends. We start our session. Just to give a background, today's session, when Oblique gave me the topic for discussion today, I was reminded of my interaction about 4 years ago, at session which I had conducted for our institute branch in Rajkot, where there are over 800 chartered accountants, I was told. another about 120 at Morbi, which is a small town near Rajpur. That was, and then I had occasion to address our participants in our Western Regional Office when it used to be at Top Parade before it shifted to PKC. So thanks to various programs which I conduct, in every program I do get our chartered accountant friends, youngsters particularly, where always a question comes and any week I at least get 2 to 3 questions from them. Sir, we want to get into foreign trade policy and custom related practice and how do we go about it. So I thought this is a very relevant topic which Anuja assigned to me. So whatever my little experience, I'll try to share with you. Friends, firstly, let me clarify this foreign trade policy word itself is slightly misleading. So people have different interpretation about the precise meaning or legal status of foreign trade policy. A question comes to our mind that why it is called a policy when it is a law. Why don't we refer to as act or rules as we do in other laws, etc. It will surprise you, though many of you may be aware also, that legal status wise, policy is a notification issued under the provisions of Foreign Trade Development and Regulation Act 1992. There is section 5 under this act, which empowers Government of India to announce their foreign trade policy from time to time by means of a notification in the official gazette of the country. So that's why you will observe that policy is not placed, discussed in Parliament. It is not introduced like a bill and then discussed in lower house, upper house, Lok Sabha, Raj Sabha, President does that. Nothing is required. It's just notified and policy comes into the existence. Now, just to give you an idea about this Foreign Trade Development Regulation Act 1992, is a smallest act in our country, has hardly 20 sections, runs into 12 pages. So in a separate book form, it is not available. So it is contained under Handbook of Procedure Volume 1, which is one of the volumes, we'll see a little later, of foreign trade policy. In this section, when you want to start your consultation, please focus first on section 15.15, dealing with appeals, because that is one gray area which is not known to most of the exporters, importers. Even in large industries, I have seen that knowledge is lacking on that area. You'll be surprised, including the department itself. So normally when something gets rejected, some notice, etc. comes, we see in all other laws, there is a provision for appeal. But here in foreign trade policy, there is no provision. Answer is, provision is very much there under Foreign Trade Development Regulation Act 1992, section 15. Other 3 sections are section 10, fine and penalty, seizures and rates. So there's just my request and suggestion is kindly take a printout at your convenience of this particular act and just begin your study with these 3 sections. And friend, you will be surprised that the language used in these sections is unlike other legal laws. It's a very simple English language which you and I use for our day-to-day professional or office work, etc. Same is the case with foreign trade development regulation rules. So policy, normally it deals with import-export related matters. But let me share with you, as you are aware, the laws or regulations are of 2 types. One is a principal regulation, principal law, other is a subordinate law. So policy and customs happen to be subordinate laws. They are not principal laws. The difference is under principal law, if a violation takes place, the punishment also is meted out under some provision of the same act. Whereas under foreign trade policy, when provision is violated, and as you know, foreign trade policy is announced by Ministry of Commerce, the punishment is meted out under Customs Act 1962. So both are interrelated, and import-export function involves simultaneous knowledge of both these laws. So any of our friends, participant friends who are contemplating entry into foreign trade policy related practice, they have to be very clear in mind that knowledge on foreign trade policy alone will not suffice. This has to be simultaneously corroborated with knowledge on Customs Act 1962, coupled with Custom Tariff Act 1975. Now, this Custom Tariff Act lays down the rates of duties which are applicable on every import item. Now, obviously, when somebody takes a provision to import or takes a decision to import an item into India, he is normally concerned with the landed cost of import item. And for that purpose, he needs information on import duty applicable on his part. So when we are entering into consultation profession related to foreign trade policy, we have to have very good knowledge about 98 chapters under Customs Act 1962. And just for your information, please remember that this Custom Tariff Act, though it may be Indian Custom Tariff Act, but the structure of customs tariff is international. And that is decided by a World Custom Organization, which is the apex body monitoring the movement of functioning of the customs department all over the world. So world over, classification of items of import, they are common. So also applies to export as well. Say for example, since all of you are sitting in front of laptop computer, laptop computers are covered under chapter 84 of customs tariff, heading number 71 and subheading 41. Any country of the world you go, laptop computer or data processing machine will be part of chapter 84, heading number 71, subheading number 41. So once we master custom tariff of India as a professional, application of it to any country of the world becomes much easier, because as an import-export business person or as a client engaged in import-export business, you are dealing at an international level. This import duties change every year in the budget, and so also the provisions under Customs Act undergo change whenever amendment is required, along with the finance bill every year. Then obviously in import, outflow of foreign exchange is involved. In export, earning a remittance of inward remittance of foreign exchange is involved. So obviously our consideration doesn't get over merely by advising the client on the subject. So we have to advise him on the intricacies involved on remittance and relation related to import and export. Now this people relate normally with the bank. Friend, let me share with you that at branch level of any bank, the knowledge on FEMA, foreign exchange regulations or regulation related to import export is very nominal, very limited. Normally they are concerned with only LC. Okay, LC khol diya, LC document negotiate ho gaya. Beyond that, neither in the companies there is adequate knowledge on this area, nor there is a knowledge at the part of the banks. So therefore, minimum 2 documents about which I will make a reference later as well, I'll share with you, is master direction on import of goods and services and master direction on export of goods and services. So they take care of your maximum operational issues which might arise during your consultation process related to import and export. Then in foreign trade policy, there are few classification rules we have to remember. And as a professional, when you start into practice, you will need a good knowledge on this. Please remember, under foreign trade policy, all import-export items fall under 5 categories. First, there is a category of prohibited items or banned items, both for import and export. So like as you are aware, import of drones has been banned into country about 15 days ago. Recently, there is a ban on export of wheat. Sugar is in the pipeline. Sugar also is going to be restricted export-wise. So like these changes take place, just like a newspaper, what we know today becomes obsolete tomorrow. Same happens with the classification items. Second, there is a category of restricted items. Restricted means that limited quantities are allowed for import and export against a specific license, which in the policy is now referred to as authorization. And these licenses are subject to actual user condition. Actual user means that only the user will be allowed. These items are not open for trading. Now, how does government decide whether you are importing or applying for a license as a trader or as a manufacturer? So as a supporting document, they ask copy for your MSME registered nowadays. That's called Udyam, as you are aware. Or earlier used to be SSI registration certificate, etc., etc. So that gives actual user condition, and that is how it gets linked to our Industrial Development Regulation Act, partly substituted with MSME Act, to which our Gupta ji made a reference a little while ago. Another key area which will come into import nowadays, with thrust on manufacture in India or make in India movement is import of technology. Now that is one area where what import comes, your client will expect you to have an answer to this, that how do I import technology? I want to make XYZ product. Now, import of technology is not part of foreign trade policy. It is a part of industrial policy supplemented with exchange control regulations. SEZ Act is another area where not a lot of units are going. So import into SEZ and export from SEZ. Again, require knowledge about those two related areas which you can cover under other heading. Then comes Legal Metrology Act 2011. This is called, in this, most important part for me as a professional is Package Quantity Rule 2011. You will find at times custom raise an objection when you import an item that MRP label is not there, and that IGST is applicable on MRP level or MRP price, not on your assessable value of import item. So as a consultant, as a professional dealing with foreign trade policy, we will need parallelly knowledge on provisions of this Package Quantity Rule 2011. Best example you can see, since all of us keep buying pen drives on a regular basis, just for your academic interest, read the label which is there on a sachet of the pen drive. It reads quantity, one number, capacity, 2 GB, 4 GB, whatever is there, manufactured by complete address will be there, imported by complete address will be there, MRP price, including what taxes board will be there. Now that is not because manufacturer or importer wants to give that information. It is part of compliance related to import of products in a pre-packaged form in India with Package Quantity Rule 2011. Then comes GST Act. Earlier we were paying on every import. It runs after 7%, and people hardly have any awareness about balance 14%. Now you are reading in newspaper every day, new free trade agreements are signed. Friend, you will be surprised that today we have free trade agreement with 19 countries of the world. To share with you the latest, of which you are also aware, the UAE free trade agreement has become applicable from 1st May 2022. Australia we have already signed, it has yet to become applicable. British Prime Minister last month when he came to India, he has fixed a deadline that India UK will conclude a free trade agreement by Diwali. That's the time he has fixed. Then Israel is another country. By end of June, we should be having free trade agreement. 28 countries of European Union, again, they are actively negotiation. If all goes well by September end, we should be having that. Then New Zealand, Canada are also in the pipeline. Friend, you will be surprised. In the world, there are 227 countries which are politically recognized as countries. Now, if all goes well, by this year end, we will have free trade agreement with nearly 54 countries of the world. So you can imagine nearly out of 227, when you have a free trade agreement with 54 countries of the world, about 25 to 30% countries will get covered. In addition to that, we have free trade agreement with 107 countries, preferential trade agreement with 107 countries of the world. So 107 and 54 makes 161. You can imagine how dimension of international business or import-export scenario will change. And this is the right time for my younger friends, particularly who are looking at a very, lucrative area beside the routine practice. Seriously think of getting into practice on all foreign trade related areas, beginning with foreign trade policy, about which I made a reference little while ago. More in detail we'll see little later. Most important area will be the customs, because the gains which accrue to your client will be very easily visible, which under Income Tax Act or Companies Act takes time to realize or materialize. Here, every importer calculates the landed cost of import item on a per shipment basis. And there, with 78 rupees nearly now rupee to $1, you can imagine how in terms of rupees when you charge even 10% basic import duty, and you reduce it to 5%, how the scenario changes. Due to lack of time, just to share one example with you recently, about 6 months ago, there was a webinar on customs which I was addressing. There were about 40 participants. There was a lady import manager from a Bangalore-based company. During question answer session, she asked me a question. She says, sir, we import one item regularly and we pay 5% basic import duty. Sir, our new consignment has come, which is of a larger quantity. And now customs have assessed it to 10% import duty. She says, sir, we opposed it. We went for personal hearing. We took our technical man to explain the item also. We said earlier assessment was same. Now how come this increase in duty amount has taken place? Custom didn't agree. And sir, we ended up paying extra import duty of 20 lakhs. I say, madam, from your question, I am not able to answer what has gone wrong. Just send me a scanned copy of both the bill of entries where you have paid 5% duty and you have. Fine, she sent me the duties, bill of entry copies. It's very simple mistake. That where 5% duty was being paid, there was a notification applicable providing for custodial rate of import duty. And by mistake of CHA, because all importers place reliance on CHA, that notification number was omitted to be mentioned on bill of entry. And computer processed it at normal import duty. Now, this type of situation as a professional or as a consultant in export-import related issues, if you are able to identify and pinpoint, you can imagine how happy it makes the client. Like again, forgive me for sharing my personal example. This is more like in the form of a case study or case laws. In almost, you can say around 1987, when I was working with Advani Oblique Limited, a Bombay-based company. That is where Rajkumarji, Adokeji, I came in contact for the first time. Then what has happened is that we were importing a raw material called cellulose powder. And we were paying 270% import duty. Came 1983 budget. And the duty, those were the days of high import duties, duty was raised to 342%, that is 70% increase. Our yearly import was around 3 crores. So extra outgo now involved with increased duty was 2 crore 10 lakhs. So obviously in a manager's meeting next day, finance department and accounts department people said that now we have to revise our price list. And that was opposed by marketing people. They say as it is, demand is sluggish. Now if we increase our price, whatever sale is taking place will get adversely affected. I kept listening both the sides. Then MD asked me, is any legal solution possible? I said, sir, give me 1 month's time. I'll study the whole issue, come back to me. Friend, to cut it short, when I studied, I found that this item was wrongly classified before my joining this company under chapter 39, which deals with the plastic. And the cellulose powder, which company was importing, had nothing to do with plastic. Just because custom accepted the classification, company was happy, they paid the duty. But actually it was a wood related item, it was a wood pulp powder, which attracted only 5% import duty. So I got the material tested from a reliable lab, got the test report, custom tested the same product, both the reports matched, and all our next consignment got cleared at 5%. Now you can imagine 342% to 5% if you bring it down. You know, you are all involved with corporate tax planning. We talk about, corporate tax planning and all that. But this type of gain, friend, will be possible only if you are knowledgeable on all these 3 related areas. And now, why I emphasize again on custom is that on 1st January 2022, new HS codes have been released. And they will be common to foreign trade policy for identification of the items. They will be common to custom classification also. Now, for 5 years, they will remain in existence. So when you are thinking of starting consultation related to import, export, etc., besides foreign trade policy, other related areas which I shared with you, this additional knowledge or input which you will be lacking with the corporates is what you have to supplement it. And again, that becomes part of customs. Then comes master direction on import and export, which I shared with you. miscellaneous areas I have talked about you. So friend, as a professional, as a consultant, when we talk about I'm a consultant on import export, I would say use that word import export. That word sounds slightly misnomer. To share my again personal example, in 1st January 1987, when I started my consultation, I took two decisions. One is I will not do license work. I will not do documentation work. Secondly, with no offense meant, I will not entertain clients from diamond industry. So these two till date I have followed. Well, when client used to call me, and then first question would be, हमारा license फंस गया है licensing authority office में, आप उसको निकलवा सकते हैं क्या? या ये matter फंसा हुआ है, आप इसको निकलवा सकते हैं क्या? And when I used to say that, sir, I am not into license job, I am sorry, I will not be able to help you out. Then immediately his question used to be, no, then what do you do? What do you do? What is your role of as a consultant? I say, sir, my role is in the planning prior to import or export. What are the export incentives applicable, etc., etc. नहीं वो तो हमारा बिजनेस चल रहा है नहीं, हमें तो ऐसा आदमी चाहिए था जो हमारी लाइसेंसिंग अथॉरिटी ऑफिस में जाके काम करा दे. मैंने कहा सॉरी सर, ये काम तो मैं नहीं करता. It was a novel concept, but then having survived 36 years in this profession, I feel that when you think of entering into this field, please master or be very clear in your mind that consultancy in foreign trade policy is a wrongly used word. Basically, it is consultancy in international business, which includes three areas: imports, export, and deemed exports, which is another neglected area in our country, though it's a very important export incentive, I would say. In foreign trade policy, another gray area, friend, which you can tap as a part of your consultation is your knowledge about export incentives. And to the export product of your client, what set of export incentives are available so that international market being highly competitive, his margin of profit gets maximized. And for that, he will look at you as an advisor or as a consultant. So major part of foreign trade policy is related to export benefits or export incentives. Some of you are aware, like advance license, which allows you to import your raw material, etc., duty-free for export order execution purpose. Import of capital goods under EBCG scheme, where nil duty is applicable, provided you commit export commitment. And friends, when we are not aware or able to correlate these areas, what consequences follow? I'll share an example with you. One Rajkot-based company who is into export business for last nearly 10-12 years, I would say, they wanted to import an equipment worth 6 crores from South Korea. Fine. Management took a decision, we'll go for export promotion capital goods scheme because zero rate of duty will be applicable. And export obligation is 6 times the duty saved to be fulfilled in 6 years' time. So their export obligation was totally obviously 6 crores. 10% basic duty was saved in this instance. Then what happened? That they imported the item, and I knew their product is such that exporting it will be difficult. And after 6 years, they will run into default and they have to pay differential duty amount with applicable interest. Now, can you believe same equipment, even they are not aware of this because they feel, our CHA will advise us. Now, imagine a situation that you have opened a LC for import of an item. Your shipment has to come, say, somewhere in July or August. And in the meantime, like with drone, it has happened recently. Government has imposed a ban on import of this item. How will you handle this situation? Now, people will have different versions. They say, no, we should take up strongly with DGFT. How can they do it? That is a common escape route. Then we should try to convince the customer that, look, when change came, we have already placed an order. But question is, will the customer agree? Somebody will say, we'll take help, make a strong representation to DGFT. We take an appointment, visit daily. Somebody will say, we'll involve some MLA, MP who knows, Commerce Minister and all that, But very simple provision is there. It says, in case there is any change in the provision of foreign trade policy relating to import or export, all those contracts which are against letter of credit will be allowed to be honored, provided within 15 days of change, contract along with letter of credit is registered with the licensing authority. Simple solution. And how effectively it works, to share about 1-year-old example, Blue Star, our leading company in air conditioning, they placed an order. There were 80 container shipment lined up. Now you can imagine expensive item like AC, 80 containers. Value was running into almost 4 crores. Fine, suddenly the ban was imposed on import of air conditioners. So obviously in the company there was a panic reaction on what to do. So as normally happens nowadays, that meeting culture is there in the corporates. Meeting was held. Everybody giving his own version of question. Poor import manager listening to everybody, getting more confused in the process. Doesn't know this transitional arrangements. Next morning he rang me up. He says, sir, ye aisa ho gaya. Now what is the solution? I say, read para 1.05 sub para B. Provision is there. Since all your imports are against LC, online you have to register these contracts. It will be hardly 15 minutes time. And the registration number will be generated online. Show it to custom while clearing the custom consignment. And friends, it is common trait with us that if the problem is very serious and if the solution is very simple, we normally don't believe it. We feel there is something catch, itna aasan nahi ho sakta. But anyway, marta kya nahi karta, they tried this out. And believe me, all consignment got cleared at Nhava Sheva Port, Chennai Port, and Delhi ICD without any problem. Now, others who did not know this provision, they ended up incurring heavy container detention charges, damages, running here, there, not knowing what is the solution involved. Another good para which will come to your rescue will be para 1.23. Heading of this para is free movement of export goods. Now, in Indian context, this looks very unbelievable para. Just see the text, it says, no agency of central or state government. I repeat, no agency of central or state government can delay, withhold, or stop export shipment. In exceptional cases, an undertaking may be taken from the exporter and consignment released for export. Any objection raised? No, custom cannot stop your export shipment. But question is how many clients know about it, how many consultants know about it. This is where the role of correlation, which I shared with you, comes handy. This is the third book. This book is in 2 parts, part A and part B, also known as ITCHS classification book. New HS code which I shared with you, now will be part of this book. And then foreign trade policy as provision regarding general in nature, which I shared with you. Import, exports, export incentives, 100% export arrangements, deemed exports, miscellaneous. Then this is the explanation of the diagram which I shared with you. This is the composition of foreign trade policy. Every solution to problem is there under this. If there is a dispute about anything, it is called here under chapter 8. And there are 62 definitions under foreign trade policy. Out of these 7 definitions, as a professional, we have to be in the know, though all of us, there is a difference in defining and describing. Most of us, as a professional, make a mistake that we mix up the two. But while practicing on foreign trade international business side, you have to always observe a distinction between the two. Condition your mind in such a way that whenever you are taking a decision, your decision-making process is based on understanding of definition, not description. Because under description mode, your lot of preconceived ideas and thoughts become the basis of decision-making. See, for example, under definition of capital goods in foreign trade policy, a truck or trailer or a vehicle is not covered, used by, say, travel agency or tourist car hire operator or company like Ola and Uber. But as a chartered accountant, if you are asked whether car or a truck or trailer is a capital goods, you will laugh at the basic question. Obviously it is. It is intangible. We derive utility over a long period of time. Under income tax, depreciation is given. You show on the asset side of the balance sheet, all that. But the same criteria is not applicable under foreign trade policy. Confusion between component and spares. Accessories, we all use cell phone accessories, etc., etc. What is accessory? So all these precisely 7 definitions. As a professional, you have to be at your fingertip, comprising capital goods, raw material, component, spares, accessories, consumables, and consumer goods. Let there be any industry, let there be any nature of import or export. Item has to fall under any of these 7 categories. And as a professional, when you think of starting your consultation, you have to master these 7 definitions. Then after this basic on foreign trade policy, because again I told you, this topic we can keep discussing even for 2 days. Then this is a classification item I was referring to under foreign trade policy. I talked about prohibited items, restricted items, canalized items. These are permitted import through government enterprise like STC or NFTC, etc. This is a very special category, most dangerous category. This word stands for specialty chemical. Word SC stands for specialty chemicals. O stands for organism. M stands for minerals. E stands for equipment. And T for technology. This is a very sensitive list of items. About 300 items are there in this list. It requires a very specific license called instrument license or authorization. Now, any item it doesn't fall in these 4 categories is termed as freely importable or exportable item. Then these are important sections under Customs Act, which as a professional you have to be in the know of when you start your consultation. These are the areas which normally will confront you during process of import. Then this is a RBI related issue I shared with you. Master Direction on Import of Goods and Services. This was issued first time, like all Master Direction, on 1st January 2016. And last it has undergone change on 6th January 2022. So at your convenience, please download this from RBI website and take a printout. Now here, just for your reference, I'll share the index of this. General guideline for import, remittance for import payments, import licenses. When we are importing, we are buying foreign chips from the bank, so this is our obligation. Time limit for settlement of import payments. You will find close relation with foreign trade policy exists in this. Then we have, these are important sections of Customs Act related to export. You can see all problem as an exporter your client would face. Answer is available here. Drawbacks, export benefit, again part of customs. Now this is likewise Master Direction on Export of Goods and Services, announced on 1st January 2016, last amended on 8th January 2021. Very interesting knowledge about it. You can see the provisions, manner of receipt and payment, again relates to import, export, foreign currency account. This is a maintained by exporters EFC account. Export to neighboring countries by road, rail or river. Project export, very big business. There are a lot of scope available to all of you who want to enter into consultation in international business. Particularly if you acquire knowledge on this particular area, specialize on this. Then export of goods on lease and hire. Then export of goods through custom ports, export of software through post, courier, etc. Receipt of advance against export. This we used to call GR waiver earlier, now the new name is EDF waiver. Then this is a very interesting RBI circular, which again very little knowledge is there with the export import of fraternity or consultants. Last amendment change on September 2021. Again, kindly take a printout. Friends, at the end I have given 7 blocks of useful websites. which for any practitioner in international business would be useful for reference purpose. Like RBI, the master direction you can download from here. Then foreign date policy, for the timing you need not buy the book. You can download from this government website. Then these free trade agreements you can download from this website. Department of Commerce and Industry, text of the agreement you will get from here. Then comes Asian Clearing Union. Now Sri Lanka facing crisis. If still we have to do export, this issue mechanism is available, payment mechanism. Very scanty knowledge with anybody. But yes, you can make dent into this area by your knowledge in this particular area. This, our LCs, they are governed by UCP 600. And our delivery terms like FOB, C&F, CIF, they are part of Incoterms, which last underwent change on 1st January 2020. Again, you can download from this area. This is our custom website. This, you can contact our Indian FCs abroad for business promotion purpose. Then, this is a very good website developed by FIO, Federation of Indian Export Organization, which gives you import duties applicable in nearly 95 countries of the world. So your export pricing becomes very easy. You can advise your client accordingly. This link gives you import duties applicable all over the world because different countries follow different financial years, so duties keep changing. This is a benefit available to members of FIO. It's a free service. You can place your page like LinkedIn to attract your business. This is one Government of India publication because there is very little published work available. So this is a journal which has gone online after August 2018. This is our Bombay very active body on exporting import related matters. This is all we have, 15 minutes for our question answers. So friends, now I am open to question answer. Yeah, let me see in the chat room. Okay, all these questions are on SME only, nothing on related to my area. You can feel free to ask your question, friends, or put it in the chat box. Anything related to this area. Yeah, friends, any questions? Akashi, any questions are there from our participants? Arugya-ji? Yeah, tell me. Okay, just let me see. अभी आए नहीं इसके अंदर चैट बॉक्स में. या वो पार्टिसिपेंट को अनम्यूट कर दीजिए. You can ask also, no problem. Okay, please discuss deemed export and applicable refund, drawback, subsidy thereon. See, deemed export basically is a local sale which has the effect of saving in foreign exchange. Because by exporting you earn foreign exchange. In deemed export is an import substitution. So there are 9 categories of local supply which qualify as a deemed export as on date, and these are contained under Chapter 7 of Foreign Date Policy. See, like supplies to 100% export-oriented units is treated as a deemed export. That is just one of the examples. Then you get 2 benefits, 3 benefits rather. They are contained under Para 7.03 of Foreign Date Policy. One is the duty drawback, which is available to exporters also, is also available to deemed exporters. Then as a deemed exporter, you are eligible to avail of advanced license facility where you can import your inputs duty free. And thirdly, which is normally won't work out, is the refund of IGST. But since your buyer will take input tax credit, you will obviously take from him. So obviously this will not work out unless you happen to supply to a category which is not covered under IGST, where turnover is below particular limit, or they are located in hilly regions and all that. So these are three main benefits which are available to a deemed exporter. My request is kindly refer para 7, chapter 7, para 7.1 for definition of deemed export. Para 7.2 of foreign trade policy says categories of supplies which qualify as a deemed export. In para 7.03, it talks about benefits which accrue to a deemed exporter. So that is what you can do it. Now, if you have imported raw material under advanced license, which was the next question, and you have not fulfilled your export obligation, then obviously you are liable to pay the duty amount along with interest, which is currently 15%, and fine and penalty to DGFT for not earning foreign exchange. Well, first type of work that you should take it, firstly, I would suggest start with custom first, because as a CA, your knowledge on taxation is there. So on indirect taxation, very little coverage is there in our syllabi, which is case with ICWA or even company secretary exam. Because I recall my experience when I was appearing for my company secretary exam, there was an option between income tax and customs. So since I was with accounts background, income tax came very easy to me. So I attempted income tax and kept custom on option. So please increase your knowledge on customs. So start with customs, then get over to foreign trade policy, because always simultaneously you have to work on this. And then simultaneously exchange control acquisition is completely easy. So that's how you go about it. Yeah. See, essentially what you have to keep in mind is, if you want to command respect of the client, don't involve yourself with the consultation work, because then client begins to doubt your bona fide. And he knows that whatever amount of settlement, etc. you are doing, client will always feel that you are pocketing something in between. So my suggestion is concentrate on your professional capability rather than getting involved with the license work. Then either a date or delayed declaration or import or earlier export goes to banks or RBI. Now there is evidence. If you are referring to evidence of import or export, then now in import there is IDPMS, import data management system, with the banks, because now there is a linkage between customs, RBI and DGFT. So if any payment is made for import and corresponding evidence of import is not submitted, just like our ledger account, it will show outstanding. So bank will chase you for that. And same happen with export, that if you have exported the goods and within 270 days, if you are not realized on payment, it will be shown as outstanding on EDPMS and the bank will start chasing with you. So ensure that, and if suppose you are not able to realize for any reason, then seek extension. And another thing is that keep yourself updating by referring to this master direction on export, etc. for changes which may take place. Like before Corona, the payment for export payment used to be 180 days. Now during Corona pandemic, it was increased to 270 days. If your client is a star exporter, it gets further 3 months extension. So in time, extension should be applied. Now, how to apply for refund under deemed export? See, refund order you use with income tax, please don't use the word here under deemed export. The three benefits I share with you. Detailed procedure you will get under chapter 7 of Handbook of Procedure volume 1. So like advanced license is covered under chapter 4 of foreign trade policy. So you have to follow that procedure. Drawback is part of drawback rules. You have to follow that procedure which is related to customs. And IGST is part of GST Act 2017. So you have to follow that procedure. So that's how 3 different set of regulations or legislations you have to be familiar with. Any questions, friends? So fine, all my friends, a very good evening to you. Thanks, Adogyaji, for giving this opportunity. Thank you, my colleagues who have made this program possible. Thank you very much to all of you. Thank you.